Okay, so somebody comes to you and offers you the following game. Like, the game is you have a 10% probability of winning $1,000. How much do you pay? So in math, we basically simply multiply it, right? So the expected value of this game outcome would be to use the probability, multiply it with the outcome. So you have $100, right? $100, you can pay $100 and you are neutral in terms of your expected value. If you pay less than $100, you would on average make money here if you would repeat this game for multiple times. And maybe this could be the offer, right? So you can pay $100 for each gameplay, right? So in order to enter the game, you can always pay $100, and then if you do it infinite number of times, you would neither win nor lose money. Okay, what about a more complicated game where you have a 10% probability of making $1,000 and 10% probability of making $10,000. So let's abbreviate it, 10K. Okay, so you have a 10% probability of making $1,000, 10% probability of making $10,000, and then 80% probability of making 0. How much could you pay for this game in order to be neutral, right? So you would neither win or lose. In this case, simply in math, we would calculate the expected value as 10% times 1,000 plus 10% times 10,000 plus 80% times 0, which is 0, right? So we can basically skip this term here. So we have 10% of $1,000 is $100. So basically we would add $100 for this probability, and 10% for the 10K would basically contribute $1,000 to our expected value, right? So this long tail opportunity here in the middle is actually dominating our expected value. So in total we could pay $1,100 in order to neither win nor lose money in the long term if we keep playing this game long enough. Because this long-term opportunity basically compensates for those type of probabilities. Even if this probability would be higher, like 20%, this would be the higher likely outcome, or this 80% is the higher likely outcome, but those outcomes don't contribute much to our expected value because they are like in the event those events happen, we don't gain as much. Okay, so I want you to consider this when evaluating the Tesla Optimus opportunity. And this is not financial advice also, this is just how I view the company, how I view Tesla. Tesla for me is like this game, right? So we have like a certain probability that something happens, and we basically have a probability distribution for different events. So if we can draw it like this. So let's take this one. We can draw it like this. Here we have the probability that something happens, and we have so this is like our payout, right? That so for instance we have low payout, but then we have a low payout with high probability. Like for instance, if you bet on the Tesla Optimus opportunity, we have a high probability that our bet will make a small amount of money, right? Because there are many competitors. You could argue that it is uncertain that Tesla will ever even sell 1 unit of the Optimus bot. So you can say, okay, it's a high probability that they sell a small amount of units. But then we have the long term here, the long tail, and the long tail means that it is an like probability that is larger than 0, so a non-zero probability that we will make huge amounts of money, like billions, like trillions of USD, right, with a certain likelihood. And what we are doing, basically, we multiply each of those probability with the amount of money we make. So here we would multiply, say, a high probability with the amount of money we are making here, then we would multiply here this low probability with the huge amount of money we are making here. And the fact that this is long tail distribution means that we have a small probability to make an obscene amount of money with this opportunity. And I think if you just look at everything below in this curve, this is basically the amount of money we are making. You could see it as calculating the integral of it. And as this is a long tail, this goes really huge, right? Because there's huge opportunity that in the future we have basically massive optionality, right? In the future we have an option call in the future opportunity of the Tesla bot. Okay, so the Tesla bot is really a groundbreaking opportunity. You can see this is manual labor, right? And we can already disrupt many jobs with the Tesla bot today. It's not a futuristic imaginary situation, right? This is already reality, like walking factories and recording everything with the camera. What security does basically can already be automated. Then here you see something in battery production or so. So you can already use it for simple tasks, and it will just become better over time, over the years. Okay, so I used ChatGPT to give a simple valuation based on this idea of expected value. Let's analyze the Tesla stock. And first it tried to give me like this kind of low effort probability distribution, right? But I didn't want to have such a coarse granular probability distribution. I wanted to have something like this. So we are looking into the future, 10 years into the future, where we say that the probability, that the median probability, also this normal scenario would be to sell 1.8 million bots per year in 10 years, right? Why 1.8 million? Because we are currently selling 1.8 million cars. So we have already proven with Tesla that we, like collectively as a shareholder company organism, that we can produce 1.8 million cars in a given year. So we are not being like too bold. I think there's definitely a market for hundreds of millions or even billions, multiple billions of bots per year. But why? Because there is infinite amount of labor, and a bot is just much more cheaper than a human laborer, and we can integrate bots nicely into our human environment. We don't have to change the environment. The bots already fit naturally because of their humanoid form factor. So they can see what we see, they can do what we do, they can manipulate what we manipulate, and every other form factor basically has the disadvantage that they might not see what we are seeing, they might not be able to manipulate what we are manipulating, so they are not as general purpose as we are. Okay, so the highest probability outcome is that in 10 years, under this assumption, we will produce 1.8 million bots. But then there's also the high scenario here in red, this red line, that we will actually produce 100 million bots. But of course, the probability is really low. So it's this long tail distribution. And the probability that we will produce 0 bots is also very low, right? Why? Because we are already producing bots. Okay, so we have this probability distribution, and now we simply need to assign like the concrete variables to this probability distribution. We fix two numbers, right? The median outcome, say, and the expected outcome and the high-end outcome. And then we basically need to now we have the probability outcome for the number of units sold in 10 years. And now we simply need to estimate the revenue per robot, calculate the expected revenue, and the average selling price of the robots, the cost and the margin, and to figure out how much money Tesla could make in 10 years based on bots, and adjusted for probabilities. So we don't need to do any further hedging, right, of these numbers, because they are already hedged in the probability assumptions. And we used this probability distribution here, this probability outcome from, as I said already, using like anchoring ourselves in the number of cars produced in 2023, which is, I think, a conservative high probability outcome. I would say it would be even more higher probability to assume a higher number. Why? Because if you can already produce that many cars today, why shouldn't we be able to produce even more robots in 10 years from now? With all the productive capacity and so on we have built until then, and all the learnings we have done, and also bots being simpler to produce as cars, having less material and everything, weight and overhead. Okay, and now ChatGPT proposed the average selling price per robot of 50K and a 30% margin. I didn't find these assumptions too likely. I think so. Elon Musk already says 20K per robot, but he speaks of 20K as being the end scenario, right, where we have already scaled to billions of units on Earth. So we sell 100 million or so. If we really, in this scenario, if we sell 100 million units or a billion units every single year, now the price per bot could be 20K, but until then it will be higher. And I assumed an average selling price of 30K, which is more conservative than what ChatGPT proposed here. Why 30K? So 30K is still much less expensive than the average cost of an employee in a given year. So you can buy the bot or pay an employee a year, and if you buy the bot you get twice as much work done, and you can keep it for longer than a year and it will be cheaper, right? So 30K is like a lowball valuation per robot. Let's assume a net income of 20K. So we assume one bot costs 10K to produce. I've already done another blog article where I outline why we can assume that a bot in the steady state might cost only 8K or so in production. Everything with not only like it might cost less, right? But 8K with the manufacturing process, like everything together might cost 8K. So let's say we can produce it for 10K. At these numbers now, we make 20K net income per unit sold. And the discount rate we use also conservative 10%. So future cash flows become less valuable by 10% every single year, which means that if in 10 years we make 20K per unit sold, now this 20K in today's dollar is worth less, right? It's worth maybe 10K or so, or even less, because of the discount rate. Okay, under these assumptions, we can calculate the expected revenue, the expected net income, and we calculate the present value of the net income. So we discount it back into the present. Our results show that in the expected number of bots sold in 10 years is approximately 2.4 million. Why 2.4 million if the expected outcome was 1.8, as I said previously? The reason is the long tail, right? The long tail gives us assigns a probability to extreme events, like 100 million units sold or so, but a very low probability. So we have a long tail of high numbers which contribute to this average. But it's also not too far off, right? This is only 2.4 million bots. I think in 10 years we could easily be at 10 million or 20 million or 50 million bots, right? I think these numbers are really can be 20 times as high. But okay, let's stay conservative. Let's say we sell only 2.4 million in 10 years. Now what we would make is 72 billion in revenue or 48 billion in net income. And of course the share price would then be a multiple of this. So multiply this with 30 or so PE. So we have a 30 times 48 billion is roughly a, what is it? 150 is a 1.5 trillion market cap company in this future scenario. So today the market cap of Tesla is only 670 billion. So if you calculate the present value of those future cash flows using the 10% discount rate, which is already pretty conservative over 10 years, the present value, so today's value of those income numbers is 18 billion per year. Okay, under these assumptions that if we sell only 2.4 million bots, as much cars as we sell today, even though the demand for those bots is much higher, it's like 100 times higher than that, or even more, right? If we sell only 2.4 million bots, and producing them also is likely not to be as much as a bottleneck as for cars, because it's cheaper and easier to produce those bots, and there's less variety in each bot produced, and there are less battery and so on. Battery overhead. We need fewer batteries per bot compared to cars. Okay, so if we only, like on average, like this 2.4 million comes from the probability distribution outlined here, right? So the uncertainty is already baked in this probability distribution, right? It has events for zero probability, producing zero bots. It has an event for producing 2 million bots or 10 million bots, right? But these probabilities become really low. And based on this probability distribution, our average number of units basically becomes 2.4 million. And so we can take these numbers, say literally, we don't have to hedge those numbers once again because they are already hedged through the probability distribution. So if we we can expect to sell 2.4 million bots in 10 years, probability adjusted, and already adjusted, right? And now we know the units. We know from the probability distribution, we know the number of units we can plug into our model, 2.4 million. And now we have some assumptions of the selling price. These are like just first principles assumptions, and the net income levels. And this gives us an expected net income of 48 billion in 10 years, or in today's dollars, using a 10% discount rate, which is also very conservative, of 18 billion. Now the question is, how much would a company be worth producing 18 billion? You can ask ChatGPT that as well, and if you look at the math, 18 billion times 30 PE, you roughly get, on the low end, 540 billion market cap today, to 900 billion market cap. And this is already probability adjusted, right? So if there is, say, a 10% probability of selling 24 million units each year, and a 90% probability of selling nothing, then you would obtain numbers like this. So the probability is already baked into this model because of this probability distribution, right? And the market cap now that should be assigned to Tesla today would be between 540 to 900 billion, only based on the Tesla Optimus situation. And of course, if in future years the probability that we will see progress on the humanoid bots, say end of this year we get some new sales numbers or so, then of course the probability of higher number of units sold will increase. And the probability might increase from 10% to 20% that we will sell 20 million units in 10 years, right? And as the probability, say, doubles from these low numbers we have today, the market cap could quickly double of the company. It needs to, like mathematically speaking, it needs to double. Currently, the market doesn't assign any probability to the humanoid robot situation. Why do I know this? Because the market cap today is 670 billion. And it should already be 670 billion only based on the bot outcome. So, but of course, Tesla has the energy business, it has a car business, it has a full self-driving subscription business, it has the robotaxi business that might manifest as well this year. So there are a few other option calls independent of this option. And of course, you might say all of these are unsure, but this is exactly what I modeled here. I didn't model 100% probability of the Optimus situation happening, right? I modeled like a probability distribution, like you should value a stock. So using such a probability distribution, we could already justify a market cap of 670 billion on the low end for Tesla. And I mean, now we can do more qualitative analysis. You could ask, okay, why is Tesla the leader? Why should Tesla be able to do this? I mean, there are many answers to this. For instance, Tesla can basically ship can ship updates, remote updates, for instance, of the humanoid robot model, basically the brain. It can ship the data from the brains to the data center for training, and then it could ship the trained model to the bots using using the satellite network they have already access to, right? And other companies couldn't do this. Other companies, like car companies, for instance, they cannot even ship remote updates to their product. It's really difficult to do, and most companies are not able to do this yet. So this is, like, for instance, one big advantage that Tesla already has. It doesn't need to change anything from the process. It can simply use the existing process from the cars to improve, update, and ship the brains to the fleet of bots, much like it does ship the updates to the fleet of the cars. Okay, so if you use this simple approach to value a business, like a probability distribution, and assign a certain outcome, like a dollar outcome to each probability, and then you sum over all outcomes, you get the expected value. We have calculated the expected value, which is of the company, which is like between 540 billion and 900 billion. Tesla market cap today is 670 billion. This already shows you something. So basically, you pay that much for the bot opportunity, and you get everything else for free, like the net income Tesla makes from selling cars, full self-driving, energy business, and so on. You get it for free, and you also have the good situation that as time is on your side. Why? As time progresses, and we will see more and more updates to the bot, more and more technical upgrades, for instance, or we see the first, like, good news in terms of number of units sold. Say we have already shipped 100,000 units or so in a given year, in say 5 years or so. Then this probability distribution gets updated, gets shifted to the right, and the higher outcome scenarios become more likely, which means that the expected value of this whole probability distributions also shifts to the right, shifts to the right top right of this chart. So basically, we will see higher and higher valuation as reality unfolds, as we solve more and more of those use cases. So this is a great situation to be in my opinion. No financial advice, but that's why I own Tesla stock, because you could either see it as getting the car business for free, the car and the energy and the battery and the software, full self-driving software, and the robotaxi business. All of those other business segments, you get them for free. Or you could see it that way, that you just pay up for the car business and the other businesses, like the energy business and so on, and you get the Optimus business for free, because the Optimus business is already worth as much as the company. So either way, I think Tesla is significantly undervalued at these prices. Okay, I think that's enough for today. Thanks for watching this video, and see you in the next video. Bye.